Namaste investors, and welcome back to The Explainer. Okay, let's just get right into it because we really need to talk about what just happened on Dalal Street. The week from July 20th through July 24th, honestly, it was brutal. We're talking 5 consecutive sessions of losses for the benchmark indices. That officially makes it the worst weekly performance we've seen in 4 entire months. The bears absolutely took the wheel this week, and today we're going to unpack exactly why that happened.
So here's our roadmap for today's explainer. First, we'll look at the benchmark indices, then the key market triggers, followed by the top gainers and losers, and finally, what to watch next.
Starting off with Section 1, Benchmark Indices. Let's look at the headline numbers. All right, the damage. The Nifty 50 tumbled a massive 567 points across 5 straight days. That's a 2.33% drop, closing out at 23,767. And the BSE Sensex? Well, it took an even heavier hit, plummeting 2,092 points, or about 2.68%, to settle at 76,060. These are just massive consecutive hits, wiping out some serious value in a really short amount of time.
And, it wasn't just the main indices feeling the pain. The Nifty Bank really led the market rout early in the week, though. Okay, we did see a minor Friday bounce that helped it settle near 56,693. Now, if you were trying to hide out in the mid-cap or small-cap space, you didn't escape unscathed either. The broader markets mirrored this exact weakness, and a huge part of that was because foreign institutional investors, the FIIs, pivoted hard into net sellers, basically just yanking liquidity right out of the market.
Moving on to Section 2, Key Market Triggers. What exactly caused this massive sell-off?
So what's the whodunit here? Well, there are 3 distinct compounding stories that literally handed the bears complete control. We've got a major earnings shock in India's biggest private bank, escalating geopolitical tensions messing with oil prices, and some really discouraging IT guidance cuts. Let's break these down. First up, 3.26%. That number is HDFC Bank's record low net interest margin, or NIM, reported for Q1. Monday set a really dark tone for the whole week when HDFC reported this, right alongside a broader income miss. And as you can imagine, this earnings shock sparked an immediate contagion across the entire private banking basket. It was a rough start.
Then we have trigger number 2, represented by a massive psychological barrier, $100. Geopolitical tensions in the Middle East severely escalated this week after some fresh drone attacks on oil tankers in the Red Sea. This drove Brent Crude right past the $100 a barrel mark. Now you might be wondering, why exactly does a conflict in the Red Sea crash Dalal Street?
Well, it's simple. India imports over 80% of its crude oil requirements. So when Brent crude spikes past $100, it acts as an immediate shock to our system. It instantly reignites domestic worries about inflation, an expanding trade deficit, and of course, currency pressure. It's a vicious domino effect.
And finally, our third trigger, IT guidance cuts. Now, IT earnings actually started off okay, but then Infosys came out and lowered the upper end of its FY27 revenue growth guidance to just 3%. And that was kind of the final blow for market sentiment. This guidance cut led straight to brokerage downgrades, adding this immense heavyweight that just dragged the entire index down even farther.
All right, Section 3, Top Gainers and Losers. Let's look at the stock-specific movers. We actually saw a massive divergence this week. The direct victims of our macro triggers, namely HDFC Bank, Axis Bank, and Infosys, took some seriously heavy losses. Yet, despite a collapsing broader market, players like Bajaj Auto, HCLTech, and ICICI Bank showed absolutely incredible resilience. Let's look at the actual percentages.
The severity of the drop here is pretty jarring. HDFC Bank plunged 9.37%, all the way down to 742 rupees. Guys, that is its worst weekly decline in 2.5 years. And that margin pressure contagion we talked about, it pushed Axis Bank lower by 7.62%. Plus, Infosys fell 5.07% following that lowered revenue guidance, just a sea of red for these heavyweights.
But hey, it wasn't all doom and gloom. Bajaj Auto was the undisputed superstar of the week, surging an incredible 6.58% on stellar Q1 results. They posted a massive 46% year-over-year jump in net profit. Meanwhile, HCLTech completely defied the IT pack, rising 5.57%, fueled by resilient earnings and this really exciting new 5,000-seat AI hub deal in Odisha. I also want to quickly highlight ICICI Bank and Trent. In a highly chaotic market, they showed steady resilience.
ICICI Bank in particular successfully held up as the preferred private bank choice amidst all the panic surrounding that HDFC reset. It's a textbook example of relative strength during a nasty sector-wide sell-off.
Finally, Section 4, What to Watch Next. Here's your proactive checklist.
So here is your concrete calendar of events to track for the coming week. First up, crude oil movements. You really need to watch if Brent crude stays elevated above that $95 to $100 range. If it does, it's going to keep intense pressure on those domestic inflation-sensitive sectors. Next, keep an eye on upcoming Q1 earnings, specifically from consumer durables, autos, and PSU banks. These numbers are heavily going to dictate sector-specific momentum.
But honestly, the absolute most important metric to watch right now is capital flow. This is the crucial tug-of-war you have to understand. With foreign institutional investors pulling out, you must keep an eagle eye on domestic institutional investors, the DIIs. Are our domestic buyers attempting to absorb those massive foreign outflows? This single dynamic is going to dictate if the market stabilizes here or if it bleeds even further.
And that brings us to the end of this Indian stock market wrap-up explainer for the week of July 20th to 24th. I want to leave you with this direct question. Are you accumulating quality stocks on this massive dip, or are you sitting on the sidelines waiting for crude oil to cool down first? Let me know your strategy down in the comments. If you found this breakdown helpful, please hit that like button, share this explainer with your fellow traders, and subscribe for our weekly structured market insights. Stay safe out there and happy investing.